Hey, good morning, everybody, and welcome to another daily market report brought to you by Mike Bjork. And it's Hump Day, Wednesday, November 17th, about almost a week from Thanksgiving here for a nice long holiday weekend for us all, at least here in the U.S. To start off here, we got a few economic news here today. These are some biggies here. We got the consumer price index is up slightly, the overall, but once you take out the food and energy, which creates the volatility, and this is really what we really look at is the core CPI, and it came in at flat zero just like the month before. These are why the Fed is concerned about deflation. Numbers like this, where it's just basically showing a flat line. It makes it a little bit more vulnerable to any more market trends that could, negative market trends that can push us lower. So this is why they're doing the quantitative easing to kind of push us towards, but flooding the markets with some more money, and then hopefully they're hoping that will trickle down to people spending and getting the economy going, and hopefully providing more jobs out there. Housing starts also down at 519,000, down from the previous month. The stock market steps just slightly a little bit, not a whole lot. That's also pretty close to a flat line. And there's also continued concerns in Europe, where the Irish government is basically saying they're kind of not wanting aid, or they're saying they're kind of refusing aid. But the rest of Europe, it seems like they're kind of pushing it on them because they see it kind of as a ticking time bomb. And this could be just the start of things. There's other countries in the EU that looks like could be going through the same thing. So, but this could be just the tip of the iceberg, so to speak, and something to keep our eyes on. So let's take a look here at the bond market. It looks like we're starting to get like a little trend here. As I mentioned, we're going to go through a correction. So we had a pretty sharp drop here. As you can see here, we dropped from way up here over 101 all the way down into the 97s. Now we're kind of working our way back up. Now we'll probably meet at least somewhere right in this range, probably in this range here somewhere, where about the 10-day moving average is. So we should be probably coming up here, hopefully over the next couple of days, at least kind of gain some of that back, and then where the market goes. I do anticipate going upwards, since the government is spending more money and they're supposed to be reinvesting that into mortgage-backed securities. So that will also help out the interest rates to keep those low for a while. So if you guys have any questions, I'll keep you up to date. But right now it's kind of seeming kind of tame. We're kind of been back and forth. As we saw, we're up further and it's kind of pulled back a little bit, but we'll see where it goes for the rest of the day. It might come back up. We've had some pretty crazy days where it's up and down last couple weeks. Like we saw here on Monday, it was way up, then it dropped. Yesterday we were way down and it came back up. Now we're up and we kind of pulled back a little bit. So there's no rhyme or reason for the big variances that are happening right now. So you guys have a great day.